Hello everyone, this is today's video analysis for April 25th, 2019. Today we're looking at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. It's very much going to be a similar analysis to our pound dollar analysis over the past couple of days as we're looking for the breakout underneath a former support area, former resistance area, the orange shaded area towards the bottom of the chart. The trend has been down. That's not too hard to see along the black trend line over here. We've seen somewhat of a ranging market for a while. If I just kind of take a box here, that's kind of hard to see. So let's make that bigger. So if I take this box right here, you can see we've somewhat been in a ranging market for quite a long time inside that blue box where it was waffling up and down for quite a long time. And the two moving averages, 100, 200 period moving average, show that as they kind of flattened together, crossed, the green crossed above the blue. Now we're seeing a little bit of a potential to cross back under and go back down. So we've seen the moving averages waffling either side of each other. We've seen the market going up and down for quite a long time. And then recent days, we've seen something new, a downtrend really taking shape and pressuring lower. So if we're going to have an opportunity to trade in the direction of trend, momentum, and sentiment, we're looking for a couple of reasons to trade it. If we're going to go short on anything, we typically, for low risk and high reward, are going to go short as it breaks through support or rallies into resistance. That's how you trade a downtrend with the lowest amount of risk. Breaking through support or rallying into resistance. So we want to identify those areas of support resistance, or what I like to refer to are decision zones. That's the colored shaded areas on my chart. And then we look for the setups around these levels where the market has consistently made trading decisions. Look back in time. The black circles show multiple times where the market bounced around between the orange and what was the yellow shaded area just above the orange zone, bottom of the blue box. So we can see the black circles, resistance, support, orange, yellow. Then if you look at the red circles, you can see consistent market behavior between the green and the orange zone. The red circles show underneath the orange zone, the green zone is the next support, but the orange zone is resistance, and we'll study that more later in the trade room today. But what we can see on the right hand side is the market is now underneath that orange shaded area. That's right around the 0.6610, 6630 level. We're actually in the trade room today probably going to be adjusting these colored zones, the orange and the green, a little bit. It's been quite a long time since we've been here into these price levels, so we'll have to go back and study it and see, are these levels exactly where we want them, or is it giving us the best representation of the decision points in the market? And we'll study them a little bit as we go into today's trade room a little bit deeper. But it's clear to me that the current market is breaking lower. It's in a downtrend. We're seeing it under the orange zone, and this becomes our opportunity on this currency pair for the day. So let's zoom it in, and you can see we're underneath it. There it is, underneath 6610, actually underneath 0.66 right now. So if we're going to trade it, again, I said if we're going to go short on anything, we go short into resistance or breakthrough support. Well, we're under support. What was support the past couple of days, the orange zone is now underneath it. And so we also want to go short into resistance. So often what we're looking for is the market to rally back to that resistance for lower risk and higher reward and go lower. So why is that lower risk? Well, if we go short at the orange zone, the risk is it turns around and breaks back above the orange zone. So the risk and our stop loss essentially is going to be above the orange zone if we get into a short. So if our stop loss is above the orange zone, letting the market rally back and retest that orange zone as resistance gives us lower risk. Our stop loss becomes smaller. If you sell it now, stop loss is really large. If you sell it at the orange zone, the stop loss is smaller. That's about as easy as we can make it. And then, of course, we'll target down to the next level, the green shaded area. We did that basically on the pound dollar in the past couple of days, and you can see how that's working out down here, currently sitting about 77 pips on the trade. So in a similar situation, we'll be looking for opportunities on rallies into resistance for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.